Florida's real estate market has been a roller coaster, booming through the pandemic, then cooling hard in 2024. But what's next? Will prices rebound, crash, or level out? In this video, we break down the expert housing forecasts for 2025 and 2026, what you can expect, what to avoid, and where the market is really heading. Before we can predict where Florida's housing market is headed, we have to understand where it is right now. And the picture is complicated. After a historic pandemic boom, things began cooling off in late 2023 and into 2024. Prices in many cities stopped climbing. Some even started to fall. In places like Jacksonville and Cape Coral, home prices have dropped between 3 and 8% year over year. Inventory, the number of homes for sale, has surged, especially in cities like Tampa, Naples, and Fort Myers. Sellers are facing longer wait times, and bidding wars? They're mostly a thing of the past. But it's not just about prices. Florida's insurance crisis has become one of the biggest drags on the market. Premiums have skyrocketed. In some areas, homeowners are paying 3 to 4 times more than they did just a few years ago. That's made monthly costs unbearable for many buyers, especially first-timers. On top of that, new regulations passed after the Surfside condo collapse are forcing older buildings to undergo expensive inspections and repairs. That's led to huge special assessments, sometimes $50,000 or more, being passed on to condo owners. And that's driving some buyers away from the condo market entirely. So here's the bottom line. Florida's housing market in 2025 is cooling, not crashing. But there are cracks beneath the surface: rising inventory, buyer fatigue, affordability issues, and growing insurance burdens. The post-pandemic frenzy is clearly over. The question now is, what kind of market is replacing it? Because what happens next will depend on interest rates, local policies, and most of all, buyer confidence. So where is Florida's housing market actually going in the next 2 years? According to economists, real estate analysts, and major housing data firms, the outlook is cautiously optimistic, but far from explosive. Most experts agree. Florida's real estate market is moving into a period of slow, steady growth. After the overheated boom of 2020 to 2022 and the correction in 2024, we're now entering a more normalized phase. The National Association of Realtors predicts annual home price growth of 2 to 4% through 2026, and Florida is expected to follow that national trend, though with regional variations. Cities like Tampa, Orlando, and Gainesville are forecast to remain strong. Why? They have growing populations, job growth, and relatively affordable housing compared to South Florida. But not every area is poised to rise. Experts warn that places like Fort Myers, Cape Coral, and Daytona Beach could continue to see price declines, especially in neighborhoods with flood risk or older condo buildings facing major repairs. And while demand is still strong overall, higher borrowing costs and rising homeowner expenses will likely keep a lid on runaway price increases. New construction is also slowing. Builders are becoming more cautious, especially in oversupplied markets. This may help prevent a glut of homes and keep the market somewhat balanced. The key takeaway? This isn't a crash, but it's not a comeback either. For 2025 and 2026, expect modest appreciation, increased buyer selectivity, and a wider gap between healthy and struggling markets. It's no longer just about owning in Florida. It's about where you own, what you're buying, and how exposed that property is to long-term risks. Smart moves now will matter more than ever. Even if prices stabilize, one big question still hangs over Florida's housing market. Can people actually afford to buy? The short answer: it depends, largely on where mortgage rates go. After peaking above 7% in 2023, mortgage rates are expected to settle in the 6 to 6.5% range through 2025 and 2026. That's better than last year, but still far from the ultra-low rates of the pandemic boom. And in Florida, it's not just the mortgage that's straining budgets. Insurance costs have exploded, especially in hurricane-prone areas. In some coastal zip codes, insurance alone can add $800 to $1,200 a month to your housing payment, even more for condos. Then you add in rising property taxes, HOA fees, and special assessments, and suddenly a modest home becomes a monthly money pit. For first-time buyers, this new normal is intimidating. Many are staying on the sidelines, waiting for either rates or prices, or both, to drop. Meanwhile, investors who once drove bidding wars are rethinking their numbers. The cash flow just isn't what it used to be. And even if you can afford the payment, lenders are more cautious. Underwriting is tighter. Appraisers are lowering values. Deals are falling through more often. The result? Buyer fatigue, slower sales, and a market that feels stuck between high hopes and hard numbers. In short, affordability is the pressure point for Florida's housing market in 2025 and beyond. Until something gives, whether it's rates, prices, or policies, many would-be buyers are staying put. And that hesitation is reshaping the market in real time. Not all parts of Florida's housing market are moving in the same direction. One of the biggest divides right now? Condos versus single-family homes. Let's start with condos, especially older ones along the coast. After the tragic Surfside condo collapse in 2021, Florida passed stricter safety and inspection laws. That means any condo building over 30 years old must now undergo mandatory structural inspections and set aside funds for future repairs. Sounds reasonable, right? But here's the catch. Those inspections often uncover major issues, and the cost of fixing them gets passed on to condo owners through something called a special assessment. We're talking $30,000 to $50,000, even $100,000 per unit. That's pushed many owners to sell and driven buyers to look elsewhere. Lenders are also more cautious about financing units in these buildings. That's led to falling condo prices, especially in high-rise developments built before the 1990s in areas like Miami, Fort Lauderdale, and Daytona Beach. Now compare that to single-family homes, particularly newer ones in suburban or inland areas. These properties are holding up better. There's still steady demand from families, remote workers, and retirees looking for space and safety, especially in cities like Orlando, Tampa, and Gainesville. Plus, newer homes usually come with lower maintenance costs and fewer regulatory headaches. So, what we're seeing now is a split market. Condos, once seen as the affordable entry point, are now burdened with uncertainty. Meanwhile, single-family homes, especially in low-risk zones, are becoming the safer long-term bet. If you're looking to buy or invest, this difference matters. Because not all Florida properties are created equal anymore. Florida isn't one housing market, it's many. And over the next 2 years, regional differences will become even more important. Let's start with the cities expected to perform strongest through 2026. Tampa, Orlando, Gainesville, and Pensacola top most forecasts. These areas benefit from strong job growth, lower climate risk, and a steady influx of residents. Prices here are expected to grow modestly, around 3 to 5% annually. But in contrast, several regions face serious headwinds. Cape Coral, Fort Myers, and parts of Daytona Beach are flagged as high-risk markets. Why? Overbuilding, rising insurance costs, and vulnerability to hurricanes. Condo-heavy areas are especially exposed. In some of these cities, prices may decline another 5 to 10% over the next year, especially for older or flood-zone properties. Even within a single city, performance varies. A newer home in a suburban neighborhood might gain value, while a beachfront condo in an aging tower could drop sharply. So what's the key takeaway? In Florida, location matters more than ever. Smart buyers will look beyond the postcard image and dig into the risks, because in this next chapter, local details could mean the difference between equity and regret. So, is Florida's housing market crashing? No, but it's not soaring either. The truth lies in the middle. A market cooling off, shifting gears, and forcing both buyers and sellers to get smarter. The next 2 years will be defined by moderate growth, rising costs, and a growing gap between strong, stable markets and risky, overexposed ones. If you're thinking about buying, selling, or investing in Florida real estate, now's the time to do your homework. Look beyond the palm trees. Ask the hard questions. And remember, not every deal is a good deal, especially in a market this uncertain. If you found this breakdown helpful, give it a like, leave a comment, and subscribe for more straight-talking housing updates. Thanks for watching, and stay sharp out there.